Rachel, welcome. Rachel, we hear a lot about climate finance, but what does it take to get capital actually flowing into smaller community-led infrastructure projects?
Yeah, it's a great question. I think for some of the larger institutional investors, they don't roll out of bed for anything under 25 million. And so that can make it really challenging for these smaller projects to access capital. So it does take quite a bit of coordination, quite a bit of work to get them ready to a point that capital can be deployed. So a couple of things that help make sure that the capital flows to these smaller projects. And we're talking, projects could range from 250,000 to 1.5 million are typically some of the scales of some of these projects. So a couple of things have to be true. One, the projects need to be investment ready. So if they're early stage, they don't have a feasibility study, they don't own the land, they don't have a clear cost analysis, it's going to be really hard for anyone to come in and underwrite that project. So you've got to have that readiness. But the other piece of this is really relationships. So if we're talking about small scale projects in rural Washington, if you don't have relationships with traditional banks or with smaller banks, you've really got to send out your feelers to a larger network, a bigger pool of capital, because often you don't have those relationships. So it takes relationship building to convince some of these smaller lenders, and making sure that your project really pencils so that when you do have a smaller lender, they're really ready to go. So a lot of work on pre-development and then a lot of work on finding the right type of capital.
Can you give me some examples of the projects?
Yeah, absolutely. So some of my favorite projects look like resilience hubs, and that sounds like a very specific asset type, but really what that looks like, it could be a church, it could be a nonprofit, it could be a YMCA that has, typically it'll have rooftop solar, it'll have battery storage on site. It might have some EV charging, and then typically there's programming involved. So there's kitchens, there's programmatic work. They're typically working alongside local fire authorities, police authorities, so that if there's a disaster that strikes, the community is ready and prepared. So that's one example of projects that we see a lot in our pipeline.
Are you seeing any promising new models or partnerships that are really closing the gap between capital and community needs?
Yeah, I mean, the market has really been flourishing in the last couple of years because of this concerted effort for market making. So one of my favorite models is there are smaller lenders like community development financial institutions, or credit unions, and then there's philanthropic capital, and then ultimately there's more market rate capital in some of the mid-market banks. And what's really great to see is that folks are getting really creative around where they can use their cash. So let's say you're a lender that doesn't have a ton of liquidity. What is really important is that they have a repayment. So they'll come in and maybe they can only cover 30% of the project, but they know where their repayment is so they can take the risk. And then you've got a more traditional bank that can come in with the permanent financing. And so that's been really popular. But one more model that I'm really excited about is that increasingly we see loan syndication. So a lot of folks that are participating into a loan pool because they might not be able to do the loans themselves, but they want to have an impact on these types of projects. So both of those are really exciting. And I think increasingly philanthropy is coming in with some of that really early risk capital. And it's very needed.
If we get this right, what's the real world impact for people and the planet?
Yeah, I mean, I'll focus on the people because it's not really, I'm not a climate scientist by trade. I'm more of an urban planner. The thing that I'm really excited about is if we get this right, we're making a new market. This becomes the standard. It's a no-brainer. Solar is cheaper. It saves the average American thousands of dollars over the life cycle of one asset. If we get to a point where this becomes a standardized asset class, it just is the way that we build. We have better insulation, we have safer drinking water, we have faster broadband. All of these pieces are quote unquote climate infrastructure, but it's also just human infrastructure, being online, being connected, having access to clean, healthy appliances, and then ultimately saving money.
Rachel, thank you so much for your
Of course,
time.
thank you.